Good morning and welcome to Equity Story Trade Watch, the 23rd of August, which is the Wednesday. And on my own today, we're going to go through lots of announcements this morning. We're not going to do the thought of the week, of course, because there's just so many things to go through. So we'll see some of the charts. We'll see if there's anything good to look at, maybe buy or sell. And we'll just take it from there. Before I start, you've got the Equity Story disclaimer in front of you. Of course, everything we talk about is general advice only. So if there's any specifics on a story, it's all about the technicals and fundamentals. All right, let's switch screens. Let's have a look at what happened overnight, because of course, that normally tells the stories where we go next. And if I just get this screen going, would be nice. Give me a sec, because it doesn't want to get me to the next screen, but it won't be a moment. And come on, here we go. Let's go to last night. All right, S&P 500. Down slightly. Dow Jones was about 0.5%. Wasn't too bad. Nasdaq was very flat, which is nice to see because they had a pretty good day the day before. Hence our pretty good run on the tech space. So overall, I think okay-ish. Nothing in there to get too despondent about, really, considering last week we had a pretty bad week. Just going through just to see what actually happened, if there's any news whatsoever from last night. So really not much to possibly get anything moving, right? That's probably the key here from overnight. Even though I think S&P joins Moody's in cutting banks' US ratings, that was, I think, fairly much flagged. That's one of the things we probably expected to happen. That's going to go on. I think the market's comfortable with that. We know that the banks, the regional banks, especially in the US, are probably under a bit of pressure, and dropping the rating. I don't think it's going to be super detrimental, but of course, it's a negative just overall, sentiment-wise, and possibly some negatives on its performances as well. Now, just from a little bit on the actual, I suppose, news last night, there was they're talking about a sudden rally in China stocks, which has traders scratching their heads. Right? I mean, the market's very skittish, and you'll see that in a moment where some of these movements are just ridiculous, right? Especially yesterday with DTL down 17% on not a bad announcement, except we just missed expectations. But that sort of reaction is just so harsh. But anyway, we'll have a look through it in a moment. But before we do that, we're just going to go through to see if there's anything in the commodity space that's worth noting. There's two things. One, iron ore. I'm expecting that to come back to 100. Yet it's going the opposite way, especially when you look at China, right? We know there's issues there. We know that there's possibly more issues to come and bigger issues to come. Yet for some reason, iron ore is defying gravity and defying logic in a way. So it'd be interesting to see what happens from here. But I would not be really reading too much into it, to be honest. When you look at the bigger picture, I think, generally speaking, I'd be more worried about China and BHP and Rios. And I think BHP themselves, when they come up with their profit the last couple of days, they were just hoping that $100 will do us fine. So I think this is 112 is just too rich for me. So I'm expecting it to come back. But anyway, it could just do whatever it wants at the moment. It's just been moved around by probably trading, maybe in a way. Another one that's worth noting is coal. And again, it's having a bit of a bounce. We can see that sort of moving drop from that 120, $130 to 150 and maybe a little bit higher, maybe 160, 165. And again, slightly maybe defying logic. But at the end of the day, this is some of the moves that are actually happening, right? So we just got to respect them. And if there's a trade to be made, we will make the trade. Let's just have a quick look at copper, the main base metal, to see what's going on. It's not too bad. It's just going sideways for the moment. Nothing too exciting. And our little uranium, which is really the one that's seen a lot of stocks that are going quite well, are still pretty good. We haven't seen any recent movements at all. So 57 is good at the moment. If it can break out over that 58 bucks, I think, you've got probably the BOEs, DYLs, PDNs, BMNs, good trading there, right? For the moment, it's still looking pretty positive. Last one, let's have a quick look at is lithium to see what's going on there, because of course there's still a lot of FOMOs in there trying to trade some of these stocks. But at the moment, you can see the sentiments really coming out of the price of lithium, coming back to that 200,000 again, renminbi, and probably heading back to that 160, maybe thousand, right? So we'll see what happens. All right, let's move on. We've had a look at that. Let's look at some of these announcements, what's happening today, because There's been a lot. So we go through them nice and quick, and we'll see the charts and we'll see how they're actually traveling. And I tell you, there's been some crazy movements today. All right, so let's go there and start with, I was really worried about this yesterday, KSC. Let's see how the market responded to that one. So the result itself was okay, right? That wasn't a problem here. The problem for me with KSC was their outlook, which was fairly depressing when you look at it, right? Let me just read it out to you. Well, let me just show you, right? What really scared me yesterday when we talked about on ATA about KSC's outlook. And I thought to myself, oh my God, this is maybe it's going to get hammered today. Depending obviously how the market takes this. Maybe it will affect LAU, maybe it will affect CLX and so on. So I'll show you what it actually come up with, the outlook here. Providing any guidance going forward remains difficult. Okay, so that's straight away. Give you a little bit of a hard to swallow. The current high inflation interest rate environment, coupled with increasing key input cost pressures, this stocking of cycle companies, lower in construction, presents a considerable risk for FY20. So they're basically setting the scene here that FY24 could be very difficult, right? Without giving you any financial numbers. The group has very low gearing levels and a strong balance sheet. Will continue to take up a composite approach. Possibly what's happening here is the company's just giving you the worst case scenario here, preparing you. If there's any hiccups along the way, you're prepared for it, right? Mentally, that you've read about it. But I think the market maybe is a little bit brushing it off, which is nice to see. Thank God for that, because I was really worried. And as a result, it's still holding trend, still looking okay. Not bad. So up 5 cents today. All right. No, I'm not too worried. I mean, I'm just worried about the outlook, where when they say that sort of stuff, normally I take a profit, right? If they don't give you that strong start to the year, good start, we're expecting a more growth. That's what I wanted to hear. But if I don't hear that, I might take a profit. So I think I'll leave it up to you guys. It seems to me cloudy outlook, maybe time to look at it something else. All right, but still, technically speaking, not bad at all. And it's trading. Let's have a look at some of these numbers they're trading. I've got some numbers, so I'm going to go through and just go, give you that P ratio, so you can just see whether they value or not value and so on. So at the moment, 250, right? Is that right? 250? Yeah, 250 and divided by, was it 21.2 cents? So it's trading on demanding 12 times. It's not too bad. So, I mean, I suppose it's a fairly value stock. Okay, but we just don't know what's going to happen next year. So that's probably for me a sell. Let's take our profits. EBO, let's have a look at this one. Okay, so we know the company had a pretty poor time here, right? They delivered a very good result today. But remember that announcement here was that they lost a big contract, right? Chemist Warehouse. So they're going to lose a big portion of the revenues. But that doesn't come into effect till the end of FY24. So FY24 is still going to be okay, right? That's what they said in the results. So, maybe there's a bit of a bounce here towards that. They've got that full year to work on other things to potentially replace that lost big contract with something else. And maybe it won't be as big of an issue, right, for EBO. But overall, I'm still probably negative on it until they fill the void, so to speak. So for me, below trend, not interested, even though they've still got another 12 months of Chemist Warehouse revenues, and it's still probably going to be okay. But I think the market's probably just wanting to see what they can come up with. Okay, let's have a look at Iluka. Iluka has come out with an announcement that wasn't taken very well by the market, right? So you can see it's been dropping. Now, the part of the drop is China, right? We just can't escape that, especially when your main market is in China, and that's for Iluka. So for me, not an unexpected falling, but, today's announcement really probably not good enough, right, for the market out there. They're probably expecting more. When you see that profit was down 44%, all these little things, and, it's going to fluctuate up and down with its profits every quarter or every half year to year. But generally speaking, I think the market's a little bit nervous with some of these commodity stocks. They want to push it up until we see some clarity coming out of China, what's going on. So, understandable, but it's now below trend. You got to get out of this if you haven't already and move on, right? So that's another one. All right, let's go to the next one. CTD. Let's see what's going on here. And we'll have a look at that also, what they're actually trading on as well. So the markets Not happy at all, down 8%. So look, when you look through the numbers, right? So if you go through the numbers, and I'll quickly show you that, profit guidance and everything else, it wasn't too bad. I mean, again, looking through the numbers, it's all about meeting expectations versus not meeting expectations. So they expected to deliver record earnings shares in EPS FY24. That's what they're talking about. They're looking for, I suppose, revenue growth. They're looking for EBITDA growth. So all that looks decent from that point of view. I think it's just a matter of missing all these expectations that everyone's putting on them. And what happens if you miss them? The market gets very, very harsh on you. And again, you could see that reaction right there of 7.5%. Is it harsh? I'd say so. The problem is it's below trend line now. If you finish like that at the end of the week, you probably have to get out of this. Well, you probably have to. Well, you do have to get out. If you follow the CTM methods, you have to get out of it. So that's another one that's down in the dumps, unfortunately. Because I think, generally speaking, their leisure and travel space is pretty good. But let's have a look what it's trading on. And I'm looking at, let me see, what are they trading on at the moment? On a daily, we'll have a look at that. And they are on 17.95, right? 17.95 divided by, whoops, 17.95 divided by the reaction 63.3. So 28 times, it's still expensive, right? For a stock like CTD. I mean, I think I remember this one trading over 30 times at some time, sometimes in the 20s. Yeah, I think it's a pass. All right, let's go on to the next one. PSI. So these guys are in the broking insurance space. You know, I really like that AUB result. That was my favorite. And really, these guys have delivered a pretty good result today. I think overall, you know, you got to go, yep, well done to you. There's a bit of growth for next year. Let's have a look what they're actually trading on as well. So $5 divided by 0.222. So they're trading on about 22. I think AUB is trading on about 21. But you know what? The difference between PSI and AUB for me is the growth. PSI gave a guidance of around the 5 to 10% growth. AUB gave the growth, I think, up to 20%, right? So for me, the better story right now, if you're looking at like for like, the growth beats AUB, and it's a little bit cheaper as well. So AUB is the one for me, but you know, this is not too bad. So I pass on this for the moment. Fundamentally, I prefer AUB as my stock. All right, let's look at some of the other stuff. RDY. So we quickly through that one. I wasn't impressed, to be honest, on this one. The growth just wasn't there for a tech stock for me. It's not bad. I mean, the reaction is okay today, I think. Let's have a look. Yeah, up 2%, but it's not good enough for me. I'm expecting, if I got a tech stock, I'm probably expecting 20% plus growth, right? And this was below that. So for me, below trend, no, pass. Next, SDR. So these guys deliver a pretty good result, even though it was flagged before. And, you know, this is the funny thing is because when you look through the FN Arena, which has got all they collate all the brokers and their thoughts about the results and so on. They said, oh, it's going to be taken very positively, this result. And there was Citi, I think, talking about, well, no, it isn't. I mean, this is the thing. You just don't know how the market reacts, right, to things. Doesn't matter what your broker says, you just don't know. But it's still okay. I mean, it hasn't moved really. 414 hasn't moved. They're still on target for me. You can see the daily still looking, decent, above trend. So I've got no problems with this whatsoever. They delivered what they said they're going to deliver, reiterated guidance. They're going to go profitable or at least cash flow positive next year, second half of the year, on target for 30% growth. That's what I like to see. Still a hold for me. No issues whatsoever. So this one's a decent one. I'm happy with that one. All right, let's move on to the next one, REH. We saw what happened with RWC, which is in a similar space. This wasn't a bad result. The problem was they've said in the outlook that conditions are deteriorating for them, right? Which is not great because presumably if they're saying that they're expecting the growth to slow down or even go negative, right, for them. So for me, if I was in this as a trade, I'd probably take a profit on the back of that outlook and move on to something else. So that wasn't quite positive. At least it's holding up reasonably well. But you'd get a little bit nervous with that outlook, and you can see that's come back to that daily. But for me, on that outlook, on the deteriorating conditions, pass for me, I'm out. All right, this is funny one because again, looking at the broker updates today on F1 Arena. They're saying, oh, they've missed expectations by a significant margin. Yeah, up 10%. Okay, so you can see, there's such a different disconnect between what the market thinks, what the broker thinks and hopes, what the actual results are. This is why it's just better to get out before the results. Come back to a week later, wait till the dust settles, and then take it from there. Once everyone's had their little word, and you can make a bit more of a better opinion and a judgment with all that information, at your fingertips. So for me, interesting, pretty strong 10% move today. Still below trend lines, mind you. So I don't think I'll be getting in yet. I'll be watching. The result wasn't too bad. I mean, when you look at it, 40% growth. The dividend was probably a little bit weaker than maybe expected. Maybe that's what the broker was alluding to in a way. But, it's the end of the day, not bad. I'd probably be thinking there's stocks out there in the tech space that are probably better. And I want to just see it trading better before I actually interested in it. So let's move on to the next one, DMP. So this has been a dog for some time. Let's see the market response to this result today. And a little bit better than previously, because I think they said they had some little bit more growth coming through in the summer months in Europe, right? The Asia still wasn't going that great, but at least they had a decent recovery in Europe, which is nice to see. However, is that enough for us? Definitely not. Still a stock that you probably wouldn't be touching for the moment. So moving on to the next one. FCL, I mean, we've talked about it. They flagged their results already. I don't think there's going to be anything in there that you get excited about. They made a big capital raising at 220. You're out of this at the moment. You just don't want to touch this. Now, the market darling, everyone, the market darling is getting an absolute bath today. And not surprisingly, because, it's priced to perfection, really, at the end of the day. Let's have a look at the actual, this is underlying earnings. So I'm going to have a look at what it's trading at the moment. So 74.11 divided by 75.6, 100 times, right? And they're coming up with growth of about 20-something%. Ooh, I tell you what, that's rich, right? And potentially, this is where they failed. I think the market was expecting much stronger outlook, even though the company came up with decent results today. The numbers were good. They moved to about almost 100% recurring revenues. All that sort of stuff looked decent. Problem is, market wants more. When you're trading on 100 times, you want perfection pretty much, right? They didn't deliver that today. Hence, it's down. Will it bounce back? Possibly. Is it going to hold that black line? Possibly. Because remember, there's still a market darling. And market darlings are very difficult to kill. Kill. So they might have a bad day or two, or maybe a week. But generally speaking, they usually bounce back after a while. So at the end of the day, very harsh reaction to the outlook. But they've been pretty good. You've got to still give them credit. While, I'm not a fan of WTC on the back of the way that they've just acquire to grow. And then, of course, they've got a great marketing and everything like that. But, you've got to still give them kudos for under-promising, over-delivering most of the time. So from that point of view, it's okay. But I want to wait till the dust settles. So just wait till another couple of days and see what you make from there, right? But that's been pretty harsh. But then again, what an opportunity for profit taking, right? It's been such a hard, strong run. Any excuse? There you go. It happens. All right, let's go to MMS. Now, these guys have been a great hot stock. So I have to give, again, congratulations to Dave for putting on a hot stock. And look at that. What a bounce. And I'm thinking to myself, really? I mean, the results are okay. They're growing at single digits here. And the market just pops at 15%. But you know why? It's that really strong tailwinds behind it, with the change in the fleets, right, going to the electric, and it's still a strong changeover from the old to the new. So they're still doing very, very well in that space. And it's good to see. I mean, but I am so shocked MMS is doing this well. Really, really shocked. Because just on numbers themselves, you go, this is not growth. This is like 5% growth, single digits. I think there's so much better stocks out there, but it's just the fact that, you know, they've got that strong tailwinds behind them. If they can deliver some sort of better numbers next year, I mean, that's what the market's probably getting excited about. Is let's just see what they're actually trading on. So $22.58. But what well done, Dave. I mean, what a inspired choice. And I think we put it on around here, I think, right? At 16 or something, which is brilliant. But anyway, let's put this on. So 1.19 equals 19 times. It's not cheap anymore, right? It's not cheap anymore. It's trading almost at 20 times. I'd be probably taking a profit, to be honest. I'm probably taking a profit on this. It's got to come back. This is, if this was growing at 50%, yeah, okay, I can make a case. It isn't. Anyway, I'll be taking a profit on this huge move. But anyway, well done to them. All right, let's have a look at HSN. Another one that's really growing by very small amounts, again, single digits. But look at that pop. That's all you need. All you need is to beat market expectations, right? And to give a positive outlook. And they have, in a way, you know, without giving us figures, they said, we're going to do quite well in FY24, better than we did in FY23. That's what you need. Again, you know, is it something I'll be buying? No, because I'm chasing growth. I'm chasing growth with a good value to it, right? So for me, MMS, I'm just not interested in, unfortunately. And so I'm not interested. Trading wise, yeah, absolutely, I am interested in trading those stories. But fundamentally, I want to get those growth stories under my belt, like the Altiums of the world, and so on. But anyway, let's have a look what they're trading on. So 587. But what a breakout this is. This is a great looking chart, by the way. 21.1. Again, would you buy 28 times a story like this? The market's a little bit mad at the moment. All right, let's move on to the next one. Woolies, much better result than Coles. Really, really, you know, there's no doubt between the two. You know, you can see on Coles results, they went down, but you can see that it's just, there's no comparison between the two. You'd be probably holding Woolies and you'd be selling Coles and moving into Woolies. That's just the way it just looks, right? Much, much better. You know, the numbers are okay. 5% growth, somewhere there, versus 0% growth for Coles. That's what it is. This is just normality of being a retailer like, you know, Staples. All right, let's move on to the next one, ASG. This was a very good chart, very good result. I like that. It should really go up today. Let's have a look. Has it done that? It has. That's a nice looking chart. So that was a really good chart. It's come back slightly. It's bouncing nice again. Looks very cheap as well. So let's put that one on. 32.5. And it's trading 249. So let's have a look at this one. It's trading on, guys, at eight times, really. Great dividends, really good results, looking probably to acquire more. I think that's what the outlook pretty much suggested. They were going to be acquiring more, consolidating their space. So they're going to be definitely buying something during FY24, no doubt. Yeah, so for me, great dividend play for this year. I think I'd probably be holding for FY24 from what I can see. All right, let's go to Worley. Next one. Decent result, no doubt. Better than I think market would have expected, plus a definitely positive outlook as well. And look at that one. That's still looking very, very good for next week. So end of the day, that looks very good, like a good little chart going up and up and up, right? Definitely tradable, looks good. I'm happy with that one. Decent results, long term, not bad if they can get on a bit of a run, right? And remember, because that can be cyclical in a way. All right, let's go to CHL. Not bad results there, still unprofitable, but you know, there's lots of growth. I think they're talking about FY24 as a consolidation year, whatever that means. So maybe the growth will slow down in a way. Not going to be no acquisitions. Well, I think that's probably what it means. But you know, decent story. Had a really transformational year with that acquisition in Europe. So we'll see how it goes. Tradable for sure. Just want to see that bottom line improve to go to a profit of some kind, right? Let's move on to another one of these MMS type stories, SGF. Let's see how they've done today. And I think decent results from them. Let me have a look. They've 22 cents EPS. So what are they trading on? 260 divided by 0.22. So 11 times. All right. So much cheaper than MMS, right? Much cheaper than MMS, sorry. And let's have a look at the daily, what the reaction was to the market. Yeah, not bad, 2% up. That was, like I said, not a bad result. I wouldn't be jumping up and down for joy, but pretty good. But it looks cheap. So, from that point of view, maybe there's something to be said that this offers a greater value than MMS does. But, MMS is a bigger business, much more diversified business. So maybe that's why it's the number one play in this space. All right, three more, I think. SDO, quickly look at that. I think we talked about WDS is still a hold for the dividends. STO, not bad. Nothing really to get excited in that, to be honest. It's all about probably the oil price at the end of the day. So it's still a hold if you're in this for a trade, on buying on that, and hope that that turns for you. TLC, and that was a pretty good result by the looks of things. But let's have a look. The market sort of bounced back above the trend again. It's okay. Nothing exciting. This is nothing too exciting, to be honest, for me. Just a tradable stock only. That's it. Last one, cost. I was really impressed with cost. This is probably one of the top picks today. What's actually happened. And I'm surprised it hasn't bounced because they come up with 50% growth, really. And when you look at the bottom line, the 30% EPS improvement, that was good. And the outlook was very strong. They said strong growth ahead, right, in every single of its businesses. So in jurisdictions, I'm really intrigued why it hasn't actually bounced. Possibly this is one that's for a buy for me, right, on these prices because it hasn't really responded. So let's have a look what it's trading on. It's a lightly traded stock, so we got to understand that, right? 0.0543. So this one's trading on 14 times. It's not too expensive around this level. So, I'd be looking at this one for sure. Yeah, look, probably one of the picks. So for today, let's go through. Let's summarize what we actually saw today. So the picks for me, COS for sure, right? Wally was pretty good. I really like the SG was very good. So let's go back to Wally again. So that was good. If you're in this here hold, I wouldn't chase it, but it's still good. ASG was very good. So if you're looking for a dividend play, really, really good. Obviously, wow, better than coal. So that was decent. MMS, I'm surprised it bounced so strongly. I'd be taking profits on that. WC, I think, harshly dealt with today. The result was pretty good. It was just the outlook wasn't probably enough for the market at the moment. SDR was okay. Again, I said, with what they delivered was expected, which is nice. I think just needs another 24 months and it will probably be better, but it's looking better actually right now as we speak. And I'm glad that KSC has responded well to that. I was really scared about it, so I'm okay with that one. So let's have a look what LAU has done. And hopefully, that's okay. That's holding on okay. LAU, 116, that's not bad. So, okay, worst performance now on the thing. Obviously, let's take a look at, we saw that. Nanosonics, let's have a look at that. That's below trend. That's got to be a sell now. Let's see if there's anything else. PlaySide possibly could be a sell at the end of the week. Ooh, it's just holding on just, isn't it? So we'll see how that does. Drops is okay, just 1 cent down. That's not too bad. Let's see if there's anything else that looks sad. Catapult, a slight pullback from yesterday. It was a really strong day yesterday. So that's not too bad from there. Let's look at the top performers. So we talked about Macmillan, we talked about Hansen. IEL, we talked about. Nice to see CTT bouncing back. We talked about it yesterday. It was really dangerous that we might have to sell if it's below 3, but good to see the bounce. So that's nice. Let's hope it holds that. Even CTI Logistics is actually bouncing back as well, which is nice. So that's also, but it's still below trend, so it could be a sell by the end of the week. And let's see what else is in there that's looking decent. That's probably catching my eye. Meta Group is still going. Wow. I mean, that's really crazy, right? Look at that. Great chart. Data 3, good to see a little bit bounce. That was a overreaction for sure yesterday, but we're just going to wait. Good to see Newwick still going up a couple more cents today, and IPD also looking decent, right? So overall, last couple of days has been pretty good for us. Some of our stories have been very, very, very good. But at the end of the day, we're going to wait till Friday, see how the dust settles, see how we go, and we'll take it from there. All right, guys, thank you so much. I love talking stocks. I can talk stocks all day. But thank you so much for joining and listening. Have a great day. Hopefully you had some winners. And again, I'll speak to you tomorrow. Cheers, guys.